at the local currency, we're sitting at around 7.12, 7.13 against the greenback. We're seeing a bit of dollar weakness coming to the fore, but it's quite surprising given that most emerging markets are perhaps looking at the North African region, the Middle East, for some direction in terms of risk appetite or risk aversion. Why are we so strong today?
I think our GDP numbers that came out a little bit more positive than expected yesterday was quite important. I think also the budget coming through today, tax revenues look like they're going to be very high, and maybe the deficit actually improves rather than worsens. So I think people are putting money into the South African bonds. South Africa looking relatively stable to the rest of Africa and other emerging markets currently. And so a bit of money flowing back into South Africa into the bonds.
Oh, you mentioned the GDP number, fourth quarter coming in at 4.4% growth yesterday. We're looking at an overall growth in 2010 of around 2.8%. The question is, are these kind of numbers sustainable? And it'll be interesting to hear the rhetoric from Finance Minister Pravin Gordhan today with regards to that and obviously the impact that the growth plan will have. We're looking at how the investor community could respond to this. It seems that most of the time the budget doesn't really create a response on the equity front and on the JSE.
I think you have to take a look at what if they're going to have any leeway on taxes for companies. I think there was a lot of tax benefits last year, and I think on the tax side, I don't think there'll be too much coming into the budget. I think what people will be looking for is how is there going to be more spend coming through. The construction sector in South Africa has been battling for the last few months, very limited amounts of work that's coming through for them. So I think a lot of people will be looking at how they're going to spend that money that's been spoken about for infrastructure spend, etc., and the 20 billion for job creation. So I think the equity markets will be looking at that very closely to see, is it going to help the private sector? And that's what we'll be looking at going forward.
We've had quite a few results to focus on today as well. In fact, the whole week we're well into the earnings season in South Africa. Growthpoint is currently up around 0.7%. This company coming out with relatively strong results. We also know that the South African listed property sector has outperformed the overall bourse, especially when you look at those numbers coming through for 2010. In fact, posting a return of 24% last year, and the JSE All Share only posting a return of around 20%. Looking at a company such as Growthpoint, what are your sentiments with regards to the results?
Yes, Growthpoint looking really solid at the moment. I think their last set of results, they improved by about 5%. This time around 8.1%. So, consistently getting shareholders back money for their properties. They sold properties as well and looking very and made 27 million there. So the company is looking very good. Looking for growth now, and by looking for growth, they've bought that V&A waterfront 50% there. That's a long-term asset. And they'll see if they can get the reward out of that. But the property sector is very good for foreigners coming into South Africa. They'll rather trade on the listed property side rather than on the physical property side. So a lot of good foreign flows coming in there, and a very good yield for them. So foreigners still looking for very good high yields will still go into our property sector, listed property sector.
Interesting to note. I mean, looking at the V&A waterfront deal back in South Africans' hands, many analysts say, well, what is the reason that we saw the international investors selling out of this property? Some are very concerned about the prospects of the V&A, given the fact that we have seen a significant amount of money in terms of capex spend coming through and increasing the V&A waterfront in terms of capacity as well. Any concerns that it could turn out to be an investment that will take longer to see returns as opposed to what has been shared with the investors?
I think one of your looks there is what do you think of South Africa's prospects going forward? It's one of the properties that's very driven by tourism, and I think if you see the tourism growth that we've had since the World Cup, it's been very positive. Whether that tourism growth will continue over the next 3 to 5 years, we'll have to wait and see. But I think if you've got a good view and a positive view of South Africa and where South Africa as an economy is going, I think that the purchase is very good, and I think that it's a very good acquisition for Growthpoint.
We saw Imperial also out with results. First half year headline earnings per share jumping 44%, and the company also just talking about things looking better and perhaps even eyeing out any acquisitions going forward. Looking at Imperial, your thoughts on these numbers and also market response to these results?
Yes, I think the numbers are very good. Imperial's moved up 25% since last year. Off a very low base, these numbers have come, but the consumers starting to get back on their feet. We see that the car sales in South Africa have moved up consistently. The rental business is doing very well. I think they'll have to worry about what's happening in Libya and the oil prices. Currently, the oil prices, we're going to have an increase in diesel, I think about 60 cents. So that could impact on their trucking business and logistic businesses. But generally, it's looking very good. We like Imperial currently. And I think going forward, they look strong for the rest of the year.
Well, let's just touch on the Libya story. We had oil price sitting just below $109 a barrel yesterday. Force majeure placed on various oil products as well from Libya. OPEC says it will step in should any massive supply constraints come to the fore. I was chatting to Wayne McCurry from the RMB yesterday, and he was saying that if people were really worried about this, then we should have seen oil prices even hit $150 a barrel. Your view on this, and do you think that it's something that we could see resolved soon?
I think what people are worried is does it spill over to other Gulf states? I think the amount of oil produced in Libya is about 1.6 million barrels a day, and it's not a huge market share. Pacific countries like Italy, they get 25% of their oil from Libya. For them, very problematic. Their oil companies have closed their business in Libya currently. So I think for specific countries, it's really problematic. But overall, it's not. I think the worry is contagion, and does it cross to other oil-producing countries? At this point, I think that is minimal, and I don't think it will. But if that does happen, then maybe a 150 oil price. But currently, there's enough oil demand. OPEC will step in for those extra barrels that the world needs.
Let's quickly touch on Shoprite. I see here that it's down 2.3%. Yesterday it was at the top of the top 40, gaining 0.25%. This company out with results yesterday, turnover increasing by over 9%. The company did say that it did experience price deflation of 1.2% over the 2010 period. Tell us about the impact that Walmart could have, because we're hearing mixed signals coming to the fore, and of course this is going to impact the overall retail space. We know that Shoprite is making a very strong and aggressive foray into the rest of the African continent, so that it does gear up for when Walmart comes into the country.
I think in the short term, the first thing you look at is food inflation. They had deflation last year. That food inflation that comes through initially, we're now flat at the moment on food deflation. We're starting to move into inflation. If that happens, Shoprite will make a lot of money in the short term, as they'll pass it on to the consumer. So on that side, looking very positive for Shoprite. On the Walmart story, it's difficult to see what Walmart's model will be. Will they come in and just decimate prices from the start, or will they see a very large margin that they can make here? So everybody's expecting Walmart to come in and just put prices right at the bottom of the level of the playing fields, but they won't need to, and why give it away? So I think maybe one or two product lines within the food sector, Walmart might come in and pinpoint one or two, and that'll cause problems. But over a whole, we'll just have to wait and see. You have to run your businesses if they're not here for now, and just be prepared for when they do come.